What's on your mind today?
I haven't really had time to think much about stuff. I saw the PPI came out and it was up again, but the markets are up a little, not much.
Yeah,
Um, so I think everyone's waiting tomorrow for the CPI,
yeah,
but it looks to me like inflation's up, and that's trouble for the Fed who wants to lower rates.
right.
And the reason they want to lower rates is because, inflation's not what, the government's borrowing money at a higher rate, which is, and borrowing more of it, and the government's spending more, which causes inflation. Okay, the more
Right.
they spend, and it's hard. On one side, it's like a seesaw. It's like on one side, the Fed's trying to higher, keep the rates higher for longer, or try not to raise them anymore to squash this inflation. But on the other side, we got the Treasury Department printing, 100 million or $1 trillion worth of money every 100 days, and it's a catch 22. It's just never going to catch up, and
Right.
until the government stops the excessive spending, it's going to be an issue, and you're going to see inflation, go up. And
Well,
you're starting to see it in the service sector now. That's what the PPI showed today, is that the service sector is no longer, where people are spending money anymore either, and restaurants are back to the same levels of the pandemic now. It's a lot of restaurants, and it's from a macro point of view, it's not looking good. You're seeing the consumers again not spending as much. And I think tomorrow we got the retail sales out, and I assume that's going to be up because everyone's going to cheer. Look, the consumer is resilient. But what they don't say is it's not adjusted for inflation. So in all these prices you and I are paying,
yeah.
that's why it's up, because we're paying more for less. I mean, you've been to a grocery store, and everyone's been to the grocery store and been to the gas station, and
Yeah. It's ridiculous. It's well, I went to the grocery store twice in one day. I don't know how that happens with us, but it just does. It's just convenience, right?
you must
And
have one close to you.
oh yeah, it's like a half mile away. So, it's like I guess how they would shop in Europe, you shop for the day. Go down
Yeah.
to the village market and you shop for whatever meals you're gonna eat for the day and the coming morning. But it's just like I was adding up, looking back over the last 12 months, is how much money I've spent on food. And every month that average goes up and has gone up, and especially in the last 3 months, 4 months. Um, and it is if you're just breaking even or just getting by as a family, that's crushing. And unfortunately, these numbers I don't think portray that in the
They
way that
don't.
they really are. So
They don't. And you look at the Wall Street Journal, I believe, came out and said since 2020, the price of food has gone up 36%. Okay. So that's inflation to me. That's, you can divide it by 4 years and you figure out what it is annualized.
right.
But so we look at, these inflation rates come out and like, oh, it's 3 point whatever percent, 3.8, 3.9. Isn't that great? Well, it's not, it's, it's not disinflation. Disinflation is when the price goes down below where it was when it started. It's
Hmm.
deflation. It's lower than it was the month before, but the price is still rising. And
Right.
the analogy is, inflation is like the elevator going up. Okay. Deflation is like the elevator going up slower. Okay. And
Right.
disinflation is like the elevator going down or the escalator going down, you
Right.
know, and we're not at that point. And again, we talked a little bit last week about stagflation. And I think what we're seeing in these numbers, although no one on the talking heads, I think we're seeing stagflation. I really do.
Yeah.
And
No,
they can deny it all they want. Um, but I have to utilize my little economics degree I got 40 years ago and say, it looks like stagflation to me.
right. Well, and you think about what was it recently I saw where they're looking at taking another element out of the CPI.
Yeah.
What was what was it that they were talking about taking out? Like they
Anything,
would
anything that's
anything,
inflationary, they take out,
right? You know, and I look at that and I just go, why didn't you just be honest? You know, but it's their
Well,
job to stay. Their job is to stay in office, and
that's
so
right.
if
Yeah.
if you have a negative event or something negative, then that's gonna kill you. You know,
Well,
that's gonna kill your opportunity.
yeah, and it's a catch 22. You can't resolve an issue or a problem unless you admit that there's an issue or a problem. If we keep
Right.
painting over it, and I think Powell spoke today in Amsterdam or somewhere, and he's like, PPI number that really doesn't matter. It's nothing. It's a
No,
nothing burger
then what
basically.
matters?
I am like, well, then why do we have it? It doesn't matter.
Right. Why do we
Why do we
have
have?
you? If you,
Yeah,
what's the
yeah,
point?
exactly. Yeah,
If
you're
these,
the one who got us into this, I think, and
right?
that was transitory, and you knew it wasn't transitory. So, I mean, I think people in government, and they're just they think we're all idiots out here in the real world, and we're not. We live real lives. We pay real prices. We work real jobs. We have
Right.
real friends and family. We don't ride around in limos and government jets that paid for by us. Okay,
Right.
thank you. You're welcome. You're welcome, guys.
Yeah.
Uh, but they keep spending on things that we don't have the money to spend on.
Yeah. Unfortunately, it's, there's always that question of, well, then when does this all stop? When does it collapse? And I think I don't know if it does. It just maybe fizzles out. And
I,
we as a global, strength of the world, the biggest and baddest nation in the world just fizzles out of old age
well,
and somebody else takes over. I don't, I
well, if
mean,
you look, yeah, I mean, you look. I think in October, the BRICS countries, Brazil and China and Russia and India, and everybody else who's joining them are going to meet in Moscow. I think in October, and just connecting the dots. If you watch gold, Russia and China have been buying their central banks gold, just stockpiling gold. And the rumor is that they're going to suggest a new currency among the BRICS backed by gold, which would make sense
yeah,
because what we do, and people are tired of when we keep printing money. We don't print money, but we keep loaning money. We make money for treasury bills, and we pay for it. That makes their currencies more worthless over there, and they're having a harder time than we are.
right.
And when Russia and Ukraine went to war, we're the reserve currency. The administration froze all of the reserve currencies in dollars from Russia, and that was kind of the turning point. That the world says, well, if they can do it to Russia, how safe are our dollars? And it brings me
Yeah,
back to the point in 1971 when Nixon said, France wanted their gold back from gold, because we were the gold standard, and Nixon said, oh, we're not going to do that anymore, and they lost their gold. I mean, that seems like we're doing that with our dollars now. What do
yeah.
you think?
I think I agree. I think what's happening is that there is such a struggle between two parties, and we are just merely funding their worlds. And when you see the largest, wealthiest people in the world, liquidating assets, when you see the largest asset managers or holders of money in the world introduce a product or a asset that has no central bank or location, and they get behind it all of a sudden. I mean, you can't survive this at this level in debt. It's just inevitable that something's going to break. So what's if I'm another country, and even though maybe I'm a China or Russia, Saudi Arabia, Brazil, India, I'm looking at this and going, okay, in the next 100 years, is this still what works? And the answer to me is no. Look at the behavior. These are kids getting out of control, and they're making a ruckus in the classroom, and we're going to shut it down. We're going to go start our own classroom. We're going to run it based on an asset that it what used to be run on, and that was gold. And so I would not be surprised if you see the U.S. dollar lose its what's the word I'm
Status.
looking status exactly. Yeah, and
I
I
think
think
I
you
think
can.
I think you're right. I don't know how fast it'll be because the dollar's so entrenched in everything,
Yeah,
and but let's just look at other alternatives, in Bitcoin for sure. A lot of people, banks are starting to buy and custody Bitcoins around the world now, banks. Okay.
right.
Uh, we've got all these ETFs and more coming. Uh, we've got, you know, BlackRock buying it up, Fidelity buying it up. Uh, and and if you go to a true Bitcoin maximalist, part of their mantra is, we need a stabler form of peer-to-peer transfer process that doesn't have a middleman, doesn't have a CEO, doesn't have a Federal Reserve to tell us what the interest rates are. It's just, and it's open. It's an open ledger, so everybody can see it. There's no uh, nothing going on with it, and it's safe and it's secure. And so again, if it's now with the SEC opening up, these Bitcoin ETFs, it's now legitimized, you know, Bitcoin as an asset class and an investable asset class. So
Mhm.
as investors, I hear a lot of people, they don't understand it, but again, who understood AI? Who understood the computer, the personal computer? Who understood the cell phone, when they
Who
came out?
yeah,
Yeah.
who understood the internet? Who understood um, organized currency after prior to Barty? I mean, or after when the U.S. came out, or the British pound came out, and they said this is now the currency. You're not going to exchange. It's not a barter system anymore. You're not going to exchange bread for a service, or a rock for an orange, or you know what I mean. And we're going to just you're going to be able to use this currency and buy things without having to exchange something. You know what I
Right.
mean?
And that's where the
Nobody
banking
understood
system
it.
came in, so they can ledger it. And so there's your middleman, the ledger.
Yeah,
Okay. So I want to trade with you. So instead of taking, 100 pounds of gold in a bag to you and travel 50 miles to buy a cow from you, I can put this gold in a bank and then they issue me script that
right,
is lighter to carry that you accept so that I can go buy your cow. Then you can go to the bank and exchange it for gold,
right.
basically. And that no longer exists.
Yeah, and so I look at this and I go, if I'm a country, up and coming country like India, and not to say that they're organizing and getting their stuff together really rapidly fast, because they haven't over the last 20 some years. They should be, but they're not. It's too much corruption. But if I'm looking at them, or if I'm them looking, I'm in 100 years, I want to be I want a solid system to work from. The way they're treating their money, the way they're borrowing, the way they're printing and diluting it, it's losing power in 100 years. I will have hooked my railroad car to a train that just is taking me over a cliff. And I hate that, because this is such a great nation. This is a
Yeah.
great country, and you can never leave this country and see so much and experience so much and achieve so much, but yet we have a system that is failing. And it's sort of that last, you're paddling so hard that you're wearing yourself out, that eventually you're just going to pass out and drown. And I
Well,
feel, I
and
feel
it's
like we're
failing.
getting
It's
that.
failing because it's a simple concept. We're spending more than we bring in. Okay.
Yeah.
And so, there's a force. What do we do? Well, we need to tax more people. So it brings less money for the people who are out working, giving you less incentive to actually work. Okay. And
Right.
then we go out and we spend, and just look at what we spend on. We spend on silly stuff in this country, not things that we need. In fact, we didn't even have it. I forget the year that taxes even came into being. When the country started, there was no federal tax.
No, I think it was in 1919s or 19 teens range.
Yeah, I
It
don't know.
wasn't that
I'd have to, I could look it up with my brain, which is my phone, but you
right.
know, but we didn't have that. And then all of a sudden we have it. And then, after World War II, we get on the gold standard, and then we broke off that, and it became fiat currency. Fiat currency is just your ability to accept it. So let's
Yeah.
just talk about that for a second. So we base all of our wealth on saying, okay, we have an inflation rate. Let's say it's whatever it is, 4% now. And let's say that the S&P is giving us on average 10% a year, over 100 years. So
Hmm.
with that 4% inflation, okay, we're now at 6%. Okay. However, with all this money printing and the devaluation of our dollar, if we're devaluing our dollar by another 10%, we're really not making any money even on the S&P, at 10%.
Yeah.
We're not. We're not.
Yeah.
I mean, so again, again, that's why you'll see the people in the Bitcoin world say, if you look at what's happening in the last 15 years in Bitcoin, it's the best performing asset class in the last 15 years of any asset class,
Right.
except for a few years. Okay, but it's interesting, and people can poo-poo it, but you can't beat the figures unless you make it into a government report, I guess, and report it differently. But
Right. Well, and I think it's so hard to understand for most people, and it's not a mainstream thing. Yet it is. If you slap the title of U.S. Bitcoin on it, and that became your currency, everybody would just say, "Okay, I accept that." And I think that in a way shows how much we are. I hate the term, but lambs, and we just we're following, somebody into a den of lions, and I think that's unfortunate at this point.
I think
Yeah.
it's easy. It's an easy concept when you think about this. I think when I was younger, I could go and get a $20 bill out of the ATM or the bank, because we still
Yeah.
had banks that would actually open the door and give you money.
Right.
And that would last me a week. I could fill my car. I could do whatever I want as a teenager,
Yeah.
And now you go and you still have that piece of paper and it still says what on it? $20. Okay.
Yeah.
But can I fill my car and do everything I did, back in the 80s? No. So let's just say you had $100,000. Okay. And in 1980, you put it in the bank and it was in a savings account making you 3%.
Yeah.
Now, what do you have? You have more than that now, but is it the same as what you would have with inflation and with the devaluation of the dollar? What is that really worth? Will that money, whatever the total is, will that money buy you what it would have bought back in 1980 when you put it in? No, no. You couldn't buy the same house, you couldn't buy the same car, you
Oh
know,
no.
you'd buy less. And that's what's happening.
What they say, I saw a statistic, one not too long ago, maybe in the last 20, 30 years, that you're 2 times the average salary would buy you a house.
Yeah.
You know, today it's 4 to 6 times the average house, I believe, in the United States. I'll look it up and put a chart up here for the video, but I think is just over 400 or over 300, 350,000, I think.
Yep.
Um, you know, it's hard to buy a house. Hell, it's hard to buy a car. Bought one yesterday.
Oh, you did. Okay.
Holy crap. Here, here's the thing. These guys are desperate to sell cars. You know, the rate we got it at, I'm like, how are you making any money?
I
You
think they're
know,
trying to move. They're trying to move product and inventory because
yeah,
the repo rate is so high, and the delinquency on car payments is high now too. So
yeah,
again, it's a good time to have money. It's going to even be a better time to have money as we continue to deflate the dollar and the cost of assets, deflates, and you can buy more with it.
yeah,
You're seeing it down in the housing market down where you live. You're starting to see the prices come down. You can, the only thing that you're not seeing it in is things we live on, the food, the energy, and all that. But eventually, with disinflation, we'll get to that, and that'll be stagflation.
right. Yeah. And I think it's no, it's interesting. I mean, if you can buy Toyota's running a real, if you got a great credit score, Toyota's running a great 4.99% rate, and the 10-year is at what? You know, you look
Yeah.
at how these things are working, and I'm like, and they're willing to wheel and deal because they have to sell cars. They have to get them off the lot. And I think, I feel good about what we did, but it's like still 20, 30 years ago, my money back then could not buy this car today. It's just ridiculous.
Yeah.
And unfortunately, I think that looking at the prices of cars today, looking at the prices of homes today, comparing that to income, those big ticket items, in my opinion, are at that sort of peak in the bell curve, and they're quickly coming down because our income is not going up and our buying power is declining. You and I have talked a lot about buying power, in relation to crypto or Bitcoin in particular, but we don't think about that when we get a 5% raise at our, W-2 income job. 5% really is still below the average inflation rate. And so you're really not getting ahead.
Yeah.
And so, which means the employer can only give you 5% because their costs have gone higher. And so they're struggling as well. It's just a pool of people in a pool, a very endless depth pool that is just, they're swimming right now.
Well, yeah, and then when you get a raise, that's wage inflation, okay, which isn't keeping up with real inflation. And so people start spending less, okay? So when they start spending less, then you and I, as a manufacturer of this bottle of water, now are not selling this many bottles of water, okay? So I don't need that many people producing this water. We
Right.
don't. So what do? We lay them off. They get laid off. Now they have no job, okay? And that we talked about, when is it going to fall apart? I think when we start seeing more of the unemployment, which is what the Fed's trying to do, is raise unemployment to slow down the economy. You can't slow down an economy when the government is the economy, and that's what we're seeing in the GDPs: government spending and government hiring. And so we lay these people off; they can't afford their houses anymore. Now all of a sudden, there's a bunch of houses on the market. Prices go down, stagflation.
Yeah, it's been a fun talk.
It has been. We kind of covered the gamut of what regular people would probably talk about. And
right. I would think so.
Yeah.
So we'll be here again next week. So look for a video and join.
Hit the like, and if you want us to talk about something, put it down in the comments, and we'll try to work that in.
Yeah, and also, check us out. Go to bestofUSinvestors.com. Check out our Platinum program, very extensive. We also have a Premium Plus program, which we just added a new service to it. It's a abbreviated version of Carrie's cheat sheet. And so we're constantly adding good stuff, and we're helping you become a better investor overall. Thank you very much.
And cut.
And cut. There you go.